Amphi data. In fact, let's welcome on board Siddharth Khemka and find out what he's recommending doing in this market. Siddharth, hi, afternoon. Good to have you on the show. Just wanted to understand what is it that you've made of what the Amphi data had to entail. There are redemptions from debt funds, and that money is deploying back into equity markets. Do you think the market, for the market rather, a large part of the correction may be behind us now?
Yeah, hi, good afternoon, Aisha. I think yes, what looks like and seems like is the bulk of the pain is now behind, and with the both the warring parties now agreeing for a ceasefire, at least a temporary phase, and then they are going into negotiations. I think slowly and gradually the supply chain will improve, and what we also believe is what could be a big positive is that along with the Russian energy, crude as well as oil available in the market. The Iranian oil has also started flowing in, and that will help ease the disruptions that has happened in West Asia. So overall, in terms of valuation, now we have already seen some of the Q4 business updates coming in, which has been decent. The quarter is expected to see another. So for our overall coverage universe of about 360 companies, our expectation is about a 10% earnings growth. Nifty should be a mid-single digit, and there could be some follow-up impact flow into the Q1. But from there, we see that earnings cycle should see some improvement as we get into FY27, where we are expecting about a 14-15% earnings growth. So valuation wise, at 18 times, we are at a significant discount to the long term average of about 20 times on the Nifty. Plus, the bulk of selling that we have seen, especially by the FIs in the month of March, we feel that the intensity has now will gradually reduce. And as things stabilize, we could see the return of FIs as well. Rupee, which had touched an all-time low, has seen some recovery, which is also helping and supporting the market sentiments. So overall, net, we believe that focus will be on the domestic fundamentals, which continues to remain steady, valuations which are now comfortable, and liquidity flows which could emerge gradually in patches that could also support the market from here on.
So what does it mean from a Q4 earnings standpoint? Give us a sense of that. Is Q4 earnings largely going to surprise us at all? Is that something that you all are penciling in? What are you penciling in?
I think in terms of Q4 earnings, we are expecting a stable quarter. Looks unlikely to give a positive surprise, given that there is definitely the impact of the higher energy prices, which we are trying to build into the Q4 numbers as well. But some of the sectors where we are expecting a stronger growth, for example, private banks should see a sharp recovery in terms of earnings, where we are expecting around 12% earnings growth. NBFCs, the lending financial should see a 30% growth. Metals is another pack, which is commodities, where we are seeing strong metal prices as well as higher volume. That should help the overall metal pack to report a 27% growth. Some of the stable quarters, auto around 12%, we have consumer around 10%. So those things should remain stable. So by far, I think this will be a stable quarter. There could be some surprises from some pockets, but I think that will be more stock specific rather than on a sectoral basis.
Okay, and if this war were to prolong, Siddharth, would that mean that there would be any downgrades, and would the downgrades be substantial? Where is it that the downgrades would be most substantial in your coverage universe?
So yeah, I think, Harsh, if you look at the war-like situation, especially the crude oil prices were to remain at elevated levels for an elongated period, I think there would be definitely more downside risk. What we have seen so far is about 2.5-3% cut in our FY27 estimates. I think there could be another 3 to 4% risk to that estimates, and specifically sectors which are directly linked to oil, crude derivatives, consumer, automobiles. Those are the sectors which could get impacted. The inflationary pressure could create risks of higher bond yields, and then hence financials, banking could also see some pressure in terms of mark-to-market losses in the treasury books. So I think those are some of the sectors, while some of the domestic facing sectors like healthcare, that could see a steady growth in this environment.
Okay, that's the take coming in on some of those sectors which are looking attractive right now. Just looking at the screen, while of course IT is one pack, which is the laggard today. The other one, of course, is Sun Pharma, Coal India. These are also stocks which are hard hit. Flat for Bharti right now. ITC, BEL are not holding up as much as some of the beaten down names which are making a comeback into the market. So that there are concerns about a lower than normal monsoon this time around. Does that make you a little bearish on some of the rural exposure plays, even within autos?
So I think if the monsoon is still some time away, and these are the initial estimates, first we have to deal with the summer season where it is expected to be much harsher, and some of the consumer durables, some of the summer theme stocks, I think that could play up. But if the monsoon were to play a spoil sport, I think yes, especially the rural facing sectors, the likes of fertilizers, the likes of within the auto space, two-wheelers, tractors, that could see some impact. But as of now, we are not seeing any of such thing to play out. You saw March, M&M reported very strong tractor volumes growth, much ahead of the overall industry. Plus, they have taken the price hikes to pass on the higher input cost. So overall, what we believe is that while some sectors within the autos are vulnerable to the monsoon, but they are reporting pretty strong and steady numbers so far to keep a positive view. Fertilizers are directly impacted, where I think there could be some downside risks based on the monsoon.
Okay, that's the take coming in on where you're currently seeing the pressure built in the market, or rather could see pressure if the monsoon were to be below normal. Coming back to IT, because that's the big disappointment today sectorally. Siddharth, what's your opinion basis what TCS's commentary and performance has been?
Yeah, I think if you look at the TCS numbers, more or less broadly in line with what the street was expecting, but nothing to cheer about as well. The growth was a bit subdued. The order book is pretty strong from a long-term perspective, but whatever productivity gains that they have managed in terms of revenue per employee has been passed on to the clients, given the AI-led pressures that they are facing. So I think near term, the outlook for IT sector is kind of a little bit subdued. We overall remain underweight from a next 1 to 2 quarters perspective. Even despite the sharp depreciation in rupee, we are not expecting much of improvement in the margin. So for TCS, we are continuing to maintain a 25% EBIT margins for next year as well. With that kind of margins, even our earnings growth remains a bit on the higher single digit, about 8% growth that we are building in. So I think the read through for the entire IT is like they have fallen. Valuations are comfortable, so there is definitely some value play. But in the near term growth, that is something that is still eluding, and which would not lead to much of upside is what we are expecting.
Okay. One stock that's buzzing in trade today is Sun Pharma. And
Pharma, today it's lower by about 4%. But so that positionally, would you say that steer clear of pharma businesses with exposure to the US, or a large one at that?
So I think if you look at healthcare, has been one of the stable sectors in the last few weeks, especially in the volatile global geopolitical environment. So there were some concerns that the US tariffs could impact Indian pharma companies, but that has been excluded. So generics have so far been excluded, and growth has been pretty much good. So I would say that in this volatility, healthcare, pharma space becomes a big, you can say, defensive sector. Plus, the growth story for some of these companies in the GLP-1, which is with the weight loss drug opportunity opening up in India, that is another trigger for them. So overall, we remain positive. I think it's a steady, stable sector. There are definitely the regulatory risks that comes in once in a while, but bearing that, stocks, some of the stocks that we like in the CDMO space, for example, Laurus, Lupin, I think that these two are also benefiting from the GLP-1 story. So I think overall there is a positive view on pharma space.
Okay, let's take a very quick break then on that note. We'll continue, of course, tracking the last lap of today's trade. It's headed in definitely for a strong close after the kind of flip-flop that we've seen all through this week. And 184 points up in the green on the Nifty futures and a decisive move above the 24K mark. No reasons to complain.
अब आ गया न्यू योनो।
Charts once again analyzed with you. An SBI, HDFC Bank, and then ICICI Bank. Where is it that you have conviction that this rebound is going to sustain?
It's difficult to bet on either of the three names in a very ranking kind of a manner. I would probably believe that maybe that slight edge out of the three names is still there with SBI because of the rally the stock had seen in the fag end of 2025, or rather in the second half of 2025, and the advantage the stock has in terms of relative positioning. It's trading above the key moving averages for itself comparatively with respect to ICICI Bank and HDFC Bank. But I also sense that I think ICICI Bank is starting to show those signs of trying to come back, maybe not to its prime, but at least to a moderate zone where you might expect at least another 5% to 7% upside for the stock. Somewhere closer to 1400 is where I would peg a near-term target for ICICI Bank. And I think in that light, maybe HDFC Bank could also try and play a catch-up. But the only catch over here, which I would believe, would be that HDFC Bank, because of the news flow the stock had been surrounding in the last few weeks, couple of months, I think could probably try and just be a slight benchmark performer with respect to the indices, or maybe a slight subpar performer with respect to the indices. So ICICI Bank, SBI would probably be the top favorites out of the three names that you mentioned.
Okay. And what about some of the high beta plays, Kunal? Should one venture there? You know, the likes of a Shriram Finance, etc., they've really been choppy in terms of their moves. Are there still opportunities there? Where's the lowest hanging fruit actually at this point?
Yeah, I think there are many pockets over here. Harsh, in fact, if I broaden this horizon towards the financial services name, you look at L&T Finance, you look at AB Capital, you look at Poonawalla FinCorp, Bajaj Finance, a stock which is still trading below its 200-day moving average, 50-day moving average approximately for itself. So there are a lot many stocks within the basket which are looking very lucrative in terms of risk reward. So I think spoiled for choices over here. But if I have to take a bet over here, I would look at L&T Finance as one of the stronger bets. The stock had performed exceptionally in 2025. Looks attractive. AB Capital is something which I've been bullish on from the slight high beta pockets within the financial services name.
Okay, let's talk about that one, disappointing sector today, and that's definitely been IT. In fact, impressing the street, at least as we speak. Take a look at what's happening within the entire metals pack, because that's where you've seen volatility all through this week. But right now, most of the metal names are holding out. And of course, yesterday, they were the ones which were the leaders amidst an otherwise weak market. Kunal, what's your reading on metals? Whether after the recent correction, which was much narrower than what some of the other sectors saw, are they now back in the green? And are they done with that correction bout?
Yeah, Aisha, I think well put, because the metal index apparently is considered to be one of the most high beta sectors. Statistically, when you look at, there are 2, 3 sectors which we highlight as high beta sectors, one of them being the realty pack, the other being the mid cap end of the financial services pocket, we call them rate sensitives. And the third, of course, is the middle, stocks. Apparently, in the last 2, 3 months, we had not seen a major correction into these metal counters, and most of the stocks were holding above their long-term moving averages. In fact, broadly, we can expect, we will probably statistically put it that the stocks from the middle pack corrected by just about 8%, 9% broadly. So I think in that context, it's a very resilient sector. And I strongly sense that we could be looking at a second round of an upside for many of these metal counters very soon. Difficult to time it as of now, but if I have to try and take a positional bet, I would look at Hindalco, Vedanta as preferred bets at current juncture.
Okay, interesting. And Kunal, with regard to auto, realty, anything that's standing out in a market, especially given the moves today that we've seen?
Yeah, I think from the real estate pack, we were highlighting Godrej Properties, Oberoi Realty as classic bets. Prestige apparently is also looked attractive. The stock has climbed above the 1300 levels. Looks to be an attractive bet. DLF struggling to break that 575 barrier, but I believe that maybe over the next week, once we see a confirmation of a break above 575 for DLF, that could also be a good trading bet. From the auto pack, Eicher Motors, Maruti, Mahindra and Mahindra, they are the ones which have been looking solid. But I also sense that Tata Motors PV could make a very strong comeback. So in the last 2 3 days, the volumes data, the futures data, and the price sensitivity indicates that Tata Motors PV could make a strong comeback in the near term. That could be a slight high risk bet, but if someone is willing to take it, I would believe that this could be an interesting stock to look at.
That's quite interesting with that entire list. In fact, Siddharth, wanted to get your opinion on the realty names. The quarterly updates selectively are looking strong. It's been quite a beaten down sector. Do you find value on the table now for realty?
So I think, Aisha, some of the business updates have been pretty strong, especially some of the recent ones. The sector has been battered after the weak outlook given in the previous few quarters, plus the recent concern about the rising inflation and the likely rate hike that could follow up in next few months. So overall, I think some of the stocks valuations looks comfortable, but I would believe that the overall the real estate cycle could be a little bit on the mature side. Some of these stocks selectively, which are reporting strong numbers, I think strong sales data, there definitely makes a sense to have a look at some of them selectively. So, for example, what we like, Prestige and Godrej Properties, these are the two stocks from the entire real estate pack, both of where we are seeing good business growth, volume growth, as well as financials remains healthy. And after the correction, it looks like a good entry opportunity in Prestige as well as Godrej Properties.
Godrej Prop, those are just some of the names out there. Now, let me switch focus to the flashes at the bottom of our screen. Shapoorji Pallonji Mistry on listing of Tata. How best would you play it? First, give us the theme and give us the thesis for that.
So I think within the broader consumption theme, some of the domestic themes likely to continue to do well. If you look at the consumer staples, I think the impact because of the rising raw material, that could be a bit impact, at least in the near term. In terms of durables, as we spoke earlier, the strong summer season is likely to drive selectively some of the players like the Voltas, likes of the companies. While wires and cables is something that we believe are continuously reporting strong numbers. They have taken the price hikes with the copper prices going up, and they are witnessing strong demand from the these high demand for power. So I think within the overall consumer durables and wires and cables are something that we believe could do well. Autos, again, consistently reporting strong numbers within that. If you look at the aggregate demand has been pretty strong in Q4. Two-wheelers have seen for Q4 has seen two-wheelers were up about 25%. CVs was about 22%. Tractors had seen strong growth of about 33%. Passenger vehicles was one which was a bit steady at about 15%. So we are expecting two-wheelers to continue to report strong numbers, also led by the higher penetration of EVs, where our top pick continues to remain is TVS Motors, which is a market leader in the EV two-wheeler space. Followed by that, I think within the CV cycle, that is something that we are hoping that FY27 should see a strong uptick and the recovery in the cycle. And on back of that, we believe Ashok Leyland is something that definitely looks interesting in this point in time.
Okay, quite interesting there. Siddharth, in fact, wondering what is it that you're making of the entire EPC play right now? Well, this quarter, of course, may be a mixed or a muted one marred by Middle East disruptions. Do you think for the next quarter, one needs to sort of bet on the rebuild West Asia theme and perhaps some of these EPC plays may actually be beneficiaries?
So yeah, I think definitely that's the case that is building up. For now, I think the execution delays and challenges remain on ground. But as and when the reconstruction activity picks up, a lot of these EPC players, transmission distribution companies, the pipes, the larger you can say the oil and gas transportation pipe companies, those would tend to benefit from the reconstruction activity in some of these West Asian countries, especially if you look at L&T, which has a strong presence and a very high exposure to the Gulf region. I think their execution should also pick up, plus newer business opportunities that should also look interesting. Plus, after the correction, I think valuations are also looking interesting, given that so far, last few years, the execution has only picked up. So I think a temporary blip for L&T, but long-term growth story remains to be strong.
Your take on an LNT at this level? You've been very bullish, by the way. Let me call that out for you. You've been very bullish from 3,400 levels. We're now very close to 4,000. What next?
Yeah, I continue to believe that. I think that was a very good time to try and look at L&T because we've always said that good prices, good news never comes together, and especially for stocks like L&T, which have been bellwethers for Indian economy as such over the last many decades. It's an opportunity in disguise. That when you see stocks correcting by almost 20% from their swing highs, especially larger cap names in this context like L&T, they become a very good opportunity. In fact, what we also saw was that when L&T had hit that 3,200, 300 levels, there was a point where most of the indicators entered into an oversold territory for the stock. At current levels, if you ask me, I think I would continue to be bullish on L&T. Of course, the price targets could be a little muted. You might probably want to just about increase your time horizon from being short term to slight positional or medium term. But I would look at an upside target of at least 4150 to 4,200 for L&T, even from current levels.
Right. Kunal, give an opinion on the overall Nifty picture and the market, structure as well is, considering from yesterday, we've seen quite a bit of rebound and it's managed to sustain and build on to it. In fact, we're now on the Nifty futures closing in at 24,100.
Yes, Aisha. So I think it's a fantastic week for the index because we've clocked in almost 5.5 or 6% for the Nifty and almost 8.5% on the Bank Nifty. This indicates that potentially going into next week, even if it's a short week, I think the market reaction should be on the positive side. As I was mentioning at the start of the show also, I would look at now at least another 500 to 1,000 points on the upside for the Nifty in the near term, say in the next 2 or 3 weeks. And for Bank Nifty, that observation which we penciled on 58,000 for Bank Nifty options, I think that potential targets of 58,000 for Bank Nifty could be in the offing in the next 2 to 3 weeks.
Okay, Kunal, Siddharth, both of you, thanks for joining in. Have a good weekend. And yeah, we're closing in good, 24,100 back on the ticker for the Nifty futures. And sectorally, it has been auto